Good morning, and thank you all for joining us today. My name is Peter Warda with the SCV Chamber of Commerce, and I'm pleased to welcome you. Before we get started, I have a couple of housekeeping items I'd like to go over. Throughout the webinar, please use the questions feature in your control panel to submit any questions that you have. We will be answering them at the end of the webinar. And with that, we're pleased to have Holly Schroeder, who's the chair for our Nonprofit Council, join us, and she'll be moderating the Q&A session after the presentation. If you have any issues, please email hello@scvchamber.com. We will be monitoring that email throughout the webinar. Please make sure to constantly check our events page on our website, scvchamber.com, for all of our upcoming programs. With that, we are pleased to have with us this morning Mitzi Like with LBW Insurance, who's also our sponsor for the event, Heather Glick-Atalla, nonprofit law attorney at Glick-Atalla, and Joan Ford, CEO at Strategic Management Group. So to give you a quick background about our presenters, Heather's primary practice area is nonprofit law, and she's worked with a wide range of nonprofit organizations that operate both in the US and overseas for over 10 years. As part of her nonprofit law practice, she forms nonprofit corporations in every state, prepares applications for federal and state tax exempt status, and serves as general counsel for nonprofit organizations that have compliance issues or are in need of assistance with nonprofit governance. So welcome, Heather, and thanks for being with us. Joan Ford has more than 20 years of fundraising and leadership experience in the nonprofit community in Los Angeles. As a consultant and nonprofit leader, she has raised funds through grants, major gifts and events, and conducted board retreats for nonprofit organizations throughout Los Angeles since 1999. So thank you, Joan, for being with us as well. For today's webinar, we understand what nonprofits are dealing with during the global pandemic. One of the biggest questions being asked is, how can I survive this financially? So today's webinar will cover nonprofit compliance and what board members should know before they come aboard, fundraising during COVID-19, and then charitable mergers as well. So with that, I'd like to turn it over to Mitzi Like. Mitzi, it's all yours.
Okay. Thank you, everyone. Just want to welcome everybody. We're always really excited to get together with all the nonprofits. Just a little bit about LBW real quickly here. We're located in the Santa Clarita Valley, but we operate in all 50 states. And just about all of our employees are involved in nonprofits. We insure 70 plus nonprofits. So this is a specialty area for LBW. And normally around this time of year, LBW would be hosting you all for lunch at Valencia Country Club. So in lieu of that, we have a webinar today. So just think if you were eating and I'm talking. So I'll move on here. Our goal at LBW, and a lot of our employees share with us, we like to give back in the form of information or a service or just a thought for your organization that you may be able to take away. And with that, I just, of course, we're in the insurance business, so I am going to say 3 quick points about insurance before we get to the meat of the presentation. First of all, you see on the screen here, directors and officers, employment practice liability, and fiduciary. And when I mean it's key to board members, this is the #1 question I get from board members for nonprofits. Do not serve on a board that doesn't have directors and officers or employment practice liability, and that policy is usually one and the same. We can talk about it after, but that's my word for you. This is what we get asked. Moving on, one more point here. In general liability, that area, there's events that you do, there's volunteers and participants. LBW reviews what the nonprofits operations are, and then we try to look at the insurance policy and compare what we've got and make sure that it matches. A lot of times there's gaps and there's extra coverages needed to insure events and volunteers and participants based on whatever your nonprofit does. So my point is there's some pitfalls here. And I'll make one last point. This is just to be quick here. This is professional liability and abuse. When we review coverages now for our nonprofits in relation to the contracts they have, and when I'm talking about the current contracts that a lot of the nonprofits do with the counties, the cities, the states, and the school districts, we're seeing that the limits and the requirements are higher than they used to be. So it needs to be looked at. So when I say, what does your contract say, that needs to be reviewed. And then I wouldn't be complete without my little 30-second commercial. This is what you would be looking at if you were eating lunch at the club waiting for our speakers to chat. I talked a little bit about general insurance here. I would like to mention we have a very robust employee benefit team, and we do a lot of employee benefits for the nonprofits, as well as the financial planning area, 401k, 403bs, we do them. So that's my 30-second commercial. Truly, LBW is here to serve. We're always here to help. We'll review anything you want us to review. We'll answer any question, whether you're insured with us or not. Here's my contact information, and you can always get it from the chamber if you'd like. Now let's get to the real meat of the presentation with my friend and trusted advisor, Heather Glick-Atalla. She's a nonprofit attorney. She's been doing it for many years. Take it away, Heather.
Wonderful. Thank you so much, Mitzi. All right, so let me get the presentation up, and then I'll go ahead and share my screen. Okay. All right, so hopefully you all can see that. Let me now minimize this. Okay. Wait, which am I sharing the right screen? Show screen. There we go. Okay, we good? Yeah, okay, we're good. Okay, I see thumbs up. Hi, everybody. Thank you so much for having me. It is an honor to be speaking in front of you today. I am a nonprofit law attorney. I serve as outside counsel for my nonprofit clients. And one of the things that I do to keep my clients out of trouble is to make sure that they are in compliance with all the various federal and state nonprofit laws. So the first part of my presentation focuses on questions every nonprofit should be prepared to answer from prospective board members. First question is the nonprofit in compliance with the various federal and California state agencies? So the status with the IRS, the California Franchise Tax Board, the California Attorney General, and the California Secretary of State can all be looked up online with a click of a button. Prospective board members can also view 990s and RRF1 filings with the Attorney General. So it's really important to make sure that the nonprofit is in compliance in California and with the IRS with all four of these agencies. On February, February, I think it was 2nd of 2020, the Attorney General released, February 1st of 2020, the Attorney General in California released a new form that certain charities are also required to file. This is called Form CTTR1, and it has to be filed every year by charities with annual revenue under $50,000 and who filed Form 990N, which is the postcard filing with the IRS. So this is in addition to and not instead of Form RRF1. And the Attorney General also updated Form RRF1, and it now requires reporting of additional information, including of non-cash donations. So if you do not file your Form 990 with the IRS for 3 consecutive years, the IRS will automatically revoke your tax-exempt status. And there's been between 20 and 30,000 charities in California alone that had their tax-exempt status revoked. So it's very important to keep up with these filings. In some cases, it is possible to reapply for tax-exempt status, but hopefully you won't be in that position because the board is ensuring that these filings are being done on a timely manner. Well, what about registration in other states? So nonprofits should be registered with the Franchise Tax Board, the Secretary of State, and the Attorney General or equivalent agencies in that state, in every state where donations are received from residents of that state, regardless of whether or not the nonprofit is actively fundraising or soliciting donations in that state. So my rule of thumb is if you have more than a handful of donations that are coming from donors in one specific state, you should be registered in that state. So even if those donations are just coming in through your website and you're not even actively fundraising in that state, it doesn't matter. That could give rise to the need to register in that state. So you need to very carefully monitor where your donations are coming from. Does the nonprofit have insurance? So Mitzi mentioned the different types of insurance. You got general liability, employment coverage, D&O liability insurance, and umbrella coverage. I can't emphasize the importance of maintaining proper insurance coverage and also working with a broker that is familiar with the specific issues that arise with nonprofits and what their unique needs are. So I work with LBW Insurance and I refer them to my clients. They're wonderful. You really want to go with a broker that is familiar with the nonprofit space because there are differences in insurance that arise between nonprofits and for-profits. You want to make sure that your policy limits are high enough that if there's any specific exclusions from coverage, that you're aware of what those exclusions are and maybe how to get additional coverage in order to maintain a proper coverage in light of these exclusions from coverage, and also make sure that you're regularly doing reviews and updating your coverage as need be. When was the last time the governance policies were reviewed and or updated? This is something that a prospective board member should definitely be asking, and hopefully you should be prepared to answer. So obviously you have your articles of incorporation and your bylaws, but one thing that you want to make sure is the mission of the organization the same in both the articles and the bylaws. So sometimes when the mission is updated, it's done through an amendment to the articles of incorporation, but then the board doesn't always ensure that the bylaws are also updated. So it's very important that you make sure that the mission is the same in all of your governance documents. At the very minimum, all nonprofits should have a whistleblower policy, a document retention policy, a conflicts of interest policy, and ethics rules and policies. There are a slew of nonprofit governance policies that we do for our clients. We have a package of 19 different governance policies and procedures that we recommend that our clients adopt and have in place before a problem arises. And this serves two purposes. Number one, hopefully if the governance policies are sufficient, then a problem will not rise to the level of escalating where a government agency gets involved. And number two, if there is some kind of investigation or audit by the IRS or the Attorney General, the first thing they're going to ask to see is what governance policies and procedures do you have in place, and please provide us with copies. So if you can provide those copies to the government agency and show them that you've made a good faith effort to stay in compliance with all of the policies that you have in place in the nonprofit laws, then you're going to hopefully survive the investigation or the audit or what may be. So very important to make sure that you have those policies in place. What are the roles and responsibilities of directors? So directors have a duty of care, and that means that you are acting in a reasonable and prudent manner in carrying out your duties as a board member. You also have a duty of loyalty, which means you're expected when making a decision on behalf of the board that you've put aside any personal interests and or disclose any conflicts of interest that you may have. You also have a duty of obedience, which means you are expected to abide by all the laws governing your organization and act accordingly to carry out your charitable purpose. Ignorance of the law in this situation is not an excuse. And finally, financial commitment. I know Joan Ford is going to be talking about this in a little bit, but does the board have 100% participation in fundraising? The board members should really put their money where their mouth is. And donors like to see that there is 100% board participation. Doesn't mean that the board has to give a ton, but if the board can honestly say, yes, 100% of our board members give, that really bodes well for the organization. So section 5231B of the California Nonprofit Corporations Code says that directors can rely on information and opinions prepared or presented by corporate officers or employees, counsel, outside accountants, and other outside professionals, so that you're not required to know what the law is. But in order to fulfill your duties of care, loyalty, and obedience, you are expected to consult with experts who can tell you what the law is and rely on those opinions. So you know, very important just to make sure that you have a good team of advisors. You have an attorney and a CPA and an insurance broker, and these are the people that you can rely on when they tell you this is what you need, and then to make reasonable decisions and follow their advice. What are the nonprofits are the nonprofits books and records in order? So of course you have your minute book. So minutes need to be taken at every board meeting, including committee meetings, no matter how short they are. And the minutes need to accurately reflect what was discussed and what actions, if any, were taken. Also, board minutes should be distributed in advance and approved with any corrections. Your records need to be readily available upon request. So your 990s and some other financial documents, in case a member of the organization requests to see them, they do need to be on hand. So there's different types of minutes. You can have an action by consent, which is where there's no meeting and the board unanimously agrees to do something, and all the board members sign a document with that consent action in the document. And it's important that you have unanimous consent when there's no meeting, because there's no discussion that's taken place. So it's very important that everybody be on board in order to fulfill that requirement of having unanimous agreement when there's no discussion that can take place. Then of course you have traditional meeting minutes where there's a meeting, and then the minutes are prepared after the meeting, and don't forget to sign them. So the secretary of the meeting should sign them, or whoever is preparing the minutes, and then place them in your minute book. So for my clients, they have both electronic copies of documents that are scanned in. Once the minutes have been signed, they're scanned in, and then they put the actual original signed minutes in their minute book. Oh, also make sure that you're attaching document copies to sets of minutes. So for example, if in a board meeting you're approving a lease, then behind the minutes where the lease is approved, you would place a copy of the lease that then goes in the minute book. Okay, part 2 of my presentation is frequently asked questions of nonprofit board members. So these are real life situations that I encounter frequently in my law practice. Can I be held personally liable for the nonprofit's wrongdoings? Yes, you can. So a director or officer of a nonprofit corporation can be held liable if he or she breaches fiduciary duties of care, loyalty, or obedience. Those are the duties I mentioned earlier. Or if they personally guarantee a bank loan or a business debt on which the corporation defaults. If they personally and directly injure someone. If the nonprofit fails to pay taxes, such as payroll taxes or property taxes, or they don't file a return on behalf of the nonprofit, and there's penalties for filing the return, the board can be held personally liable. So this gets back to making sure that if you don't know what your filing requirements are or what the taxes are due, that's where you consult with experts who then you can rely on. And if somebody tells you there's no tax that due, get it from them in writing. Get a letter from them saying you don't owe any tax due, and that way if there is some kind of tax that's due, you're not going to be held personally liable for it, because you can say, well, look, I relied on this advice from this expert. If a board member intentionally frauds someone that on behalf of the nonprofit that causes harm, they can be held personally liable. Or if they commingle the nonprofit funds with their personal funds. So it's very important to keep separate books and records between the nonprofit entity and any individual director or officer's funds. How political can a 501c3 public charity be? This is a question I get quite often, especially you know, under the current circumstances with everything going on right now. So a 501c3 public charity can conduct a limited amount of lobbying activity. Well, what does that mean? So lobbying activities must be insubstantial. So my rule of thumb is no more than 10 to 15% of the organization's time or revenue can be spent on political activities in relation to the charity's exempt purpose activities. A nonprofit cannot intervene in any political campaign, and it can't target subsections of people that are likely to vote for one candidate. Even under the insubstantiality test, most advocacy commonly conducted by charities doesn't rise to the level of lobbying. So for example, a charity can attempt to influence the actions of government officials aside from legislative decisions. It can advocate its views through public interest litigation. It can convene conferences on public policy issues, even if those issues are controversial. And it can express its views on those issues through advertisement, all without engaging in lobbying, as the IRS understands that term. How much authority can the board delegate to committees or employees? A lot. All but certain board powers can be delegated to committees. There's a few exceptions that cannot be delegated that should be reviewed before you delegate any authority to a committee of the board. But the key thing to keep in mind is that if the committee will be exercising board authority, it has to be comprised 100% of board members. So you can't have a committee of non-board members. Even if just one person on the committee isn't a board member, that committee cannot have any board authority. So really it would be more, if there are non-board members, it would be more like an advisory committee. So gathers information or research, prepares reports, sends them to the board, and then the board makes ultimate decisions based on that information that they are presented with. But the committee, if it's not comprised 100% of board members, they're not going to be making any decisions on behalf of the nonprofit. And even when the board is delegating authority, it must always maintain oversight. I had a situation recently where a nonprofit had a committee that was not comprised wholly of board members. There were 2 board members on the committee, and I think there was like maybe 7 people total on the committee. And that little committee was kind of acting as its own nonprofit. The board of the nonprofit did not have control over the committee, and the committee even had its own bank account where only the committee members were authorized signers. So the moral here is you can be held personally liable as a director for misuse of funds if you delegate authority to a committee that is not comprised wholly of board members. So something that comes up a lot in my practice, but I highly recommend delegating. I don't expect the entire board to make every decision. There can be many subcommittees of the board that are in charge of different programs or activities. That's completely fine. What happens to funds previously raised if the nonprofit changes its mission and projects? So the charitable trust doctrine is based on California common law, and it was originally set forth in a case called Pacific Home v. County of LA back in 1953. And the charitable trust doctrine requires that a gift accepted by a charitable organization must only be used for the expressly declared charitable purposes of the corporation at the time of the acceptance, even if the corporation changes its purpose, transfers those assets, or dissolves. So this restriction is imposed even if the donor didn't expressly place any restrictions on the gift. So if a charity amends its purposes, then any gifts that were received pre-amendment can only be used to further the original charitable purposes. The exception to this rule is where the charitable purpose has become illegal, impossible, or impracticable. In this case, the gift must be used to further a charitable purpose that is as near as possible to the original charitable purpose. So how do you know what an organization's purpose are? Well, if the IRS were to look at the organization, they're going to take a look at the articles of incorporation, the bylaws, their tax return, see what their activities are, what does their website say, and these are all sources for what the organization's purposes are for the purpose of determining how the money raised at the time of the declaration of those purposes is actually being used. So if your organization's purpose statement has a geographic limitation or is overly limiting, you might want to consider whether it needs to be amended. Just make sure that if you do amend it, earlier acquired assets may need to be applied to the organization's purpose pre-amendment. So when I draft articles of incorporation, I like to be as broad as possible. And that way you're not limiting yourself to very specific activities. You can include as many different purposes as you want, although it's better to have of course a focus, but don't necessarily limit yourself. If you think maybe someday I might want to do this, include it now in your articles of incorporation. That way you can raise money and use that money for that purpose should you decide to in the future. Can the directors and officers of a nonprofit receive a salary? Yes, they can, but there are certain rules. So under section 5227 of the Nonprofit Corporations Code in California, not more than 49% of a public benefit corporation's governing body may be composed of interested directors. So an interested director is defined as any person who has been compensated by the corporation for services within the last 12 months and any member of such person's family. So as long as you are in compliance with the 49% rule, yes, you can receive a salary. But there are two other issues that you need to be aware of: inurement and excess benefit transactions, which are actually very similar concepts. Inurement is governed by section 501c3 of the Internal Revenue Code. And it states that no part of an organization's net earnings may inure to the benefit of an insider. And an insider is a person who has a personal or private interest in the activities of the organization, such as an officer, director, or a key employee. So for example, an example of inurement is payment of unreasonable compensation to an insider. And private inurement is absolutely prohibited. So even the tiniest amount of inurement could be grounds for complete loss of tax-exempt status. However, with an excess benefit transaction, so this was put into section 4958 of the Internal Revenue Code, and it was done by Congress to combat the void created by the harshness of the complete prohibition against private inurement, which led to excess benefit transactions, this concept. And so section 4958 of the Internal Revenue Code prohibits excess benefit transactions between insiders and a charity, such as its directors, officers, founders, substantial contributor, and key employees, and those related by blood, marriage, or in business with the insider and the charity. And an excess benefit transaction is any transaction between a public charity and a disqualified person in which the economic benefit is greater than the value of the consideration provided for the benefit. So non-fair market value transaction, unreasonable compensation, these are examples of an excess benefit transaction. And excess benefit transactions must be reported to the IRS, and the IRS imposes excise taxes on any person who engaged in an excess benefit transaction with a public charity, and on any organization manager who knowingly approves such a transaction. And the tax penalty ranges anywhere from 25% to 200% of the excess benefit. But you can have a presumption of reasonableness, and there are three factors in determining whether this presumption is there. So the first is the compensation arrangement or terms of the transfer are approved of in advance by the charity's governing body or by a committee of the governing body. Two, the governing body or committee obtained and relied upon appropriate data as to comparability before making its decision. And three, the governing body or committee adequately documented the basis for its decision concurrently with making that decision. And I really can't emphasize enough the importance of maintaining these three things so that you can have that presumption of reasonableness in the event that there is ever a question, is there an excess benefit transaction? And this is my final slide for my part of the presentation. Can the nonprofit give employees bonuses? So remember that charitable trust doctrine that I talked about a few minutes ago? Well, it also applies in cases in which a charitable organization distributes funds for a purpose not in furtherance of its charitable purposes and without any legal obligation to do so. So for example, giving an employee a bonus or a retirement payment without having any obligation to do that. So how do you get around this problem? Well, if an organization wants the flexibility to pay bonuses or other forms of compensation for past services, make sure that this is documented in an agreement or a job offer letter or a policy at the time of employment, so before you hire the person. Even if the specific details like the amount of a possible bonus or the benchmarks to receive it aren't known at the time that the person is hired, the possibility of receiving a bonus may be treated as consideration inducing an employee to accept employment by the organization. And this could justify the payment of a bonus for past services so long as the total compensation is just and reasonable as to the organization. So that's it for my part of the presentation slides. I am going to now turn it over to my colleague, Joan Ford. Joan, let me give you keyboard and mouse. There you go. Okay.
Awesome. Well, welcome everybody and thank you. I want to echo Heather. It's very exciting to be here with you today. Next year, I want to be invited to the country club for lunch. So hopefully you'll invite us back and Heather and I will come. We'll do something else, we promise, but we want to come to lunch at the country club. So I am a nonprofit fundraiser. That's what I do. I also do interim CEO work and I definitely do a lot of board development, but primarily I'm raising money and especially right now during COVID. So I'd like to share a little bit of information about fundraising. I think there's a lot of misconceptions in nonprofit fundraising, both outside and inside the industry. And I think it's worth going over the things that I call myths. And they've been myths for a long time, but they exist. And I just have to make sure I have control of my slides, which I don't seem to have. There we go. Thank you. So there's a couple myths that are my favorites. And one of them is it's out there, right? You're talking about fundraising and somebody says, well, it's out there, as if all this money is hanging from trees and we go and pick it. Anybody who's been on a board and has had to do fundraising or work with the staff on raising money for the gala or whatever it is, you realize the money is not hanging from the trees. As a matter of fact, what I've seen over the last few years is a whole lot less money and a whole lot more nonprofits. So it is not out there. And what is out there is very hard to find and get. And that's why we have to be very smart about it. My very, very, very favorite myth is if we could just get our hands on Helen, Beyonce, Bill Gates, Elon Musk, Jeannie Pritzker, somebody who's very wealthy, and get in front of them and tell them about our mission, they'd give us a whole bunch of money because it's so special. And having worked in an organization with Steven Spielberg, I can tell you that people at that level have about 20 people around them who do nothing but make sure you can't get near them. Not only that, but just because they have a ton of money doesn't mean they are going to give it to you. And so it is not a strategic move. It's not something to sit around thinking if we could just make that happen. It doesn't even exist. And as soon as someone says it to me and I start trying to explain to them why it is not a good fundraising strategy, I start to feel like maybe it's not going to work between us. And the other myth is about companies and corporations, that they sit around and give away a lot of money. Since 2008, the amount of corporate funding that is out there has shrunk considerably. Why? Because companies are in business for their stockholders. A lot of them have, pro-social and a corporate social responsibility department, and their employees volunteer and they do good things for the community, and it behooves them to do so, especially if you have a lot of millennials working for you. But they are going to spend as little on it as possible. What they're really looking for is volunteer opportunities for their employees. And if you can provide that, you might be able to have some sort of relationship. There are maybe 5 or 6 I can think of in Los Angeles that do have foundations, Amgen being one. What do they use it for? The pet projects of their key executives. And that is a very common thing. Neutrogena, exactly the same thing. So companies do not give away a lot of money. and having that as your strategic plan for raising money is not going to be successful. This is another one of my real favorites, is that the primary role of the board is generating ideas for the staff to then act upon. And the staff are the ones, or should be the ones, that are the fundraising experts. They should be working with the board and the ED to develop a strategic plan around your fundraising and then work together as a team to implement it. But they are the ones who really know what will work. And there is nothing like a good board member coming in and saying, another friend of mine did this at their nonprofit, and you think, wow, that's a great idea, let's do it. That's always welcome. But really, you need a plan, and you're working on the plan, and the board is part of the fundraising team. The biggest myth of all time is that people like me walk around with a little book, and we just look people up on our phone, and we call them and say, geez, I haven't called Mrs. Smith yet today. I'm going to call her and ask her for $400,000 for these people because they need it. It doesn't work that way. If Mrs. Smith has $400,000, she knows how she wants to spend it, and she doesn't need my help doing it. So I don't have a list of people. Do I work with very wealthy people? I do indeed, and have for many, many years. I have never told anybody in an interview when they were thinking of hiring, oh, I can call Mrs. So-and-so, because you know what? That would destroy my relationship with Mrs. So-and-so, and she doesn't do things because I want to. It all depends on you, the board. You are the most important part of fundraising in the organization. So we're going to go through a couple more myths. And again, Heather, I think it's you. Thank you. So one of the things I find really, it's kind of amusing, having done about a bazillion galas, is that the board members will say, well, you know, that money should come from the community. The community is not supporting your gala. Maybe one person, but really it is about the board's connections, whoever you're honoring's connections, what you're doing inside that gala. If you have a celebrity coming, you know, that's where your fundraising come from, is the components of the gala, and that's why they're so critical. But we are not, you know, I always get really confused when people say that. Am I, you know, going out to the poke place on the corner, or what's going on here? But, you know, Verizon doesn't need 57,000 invitations to people's gala asking them for, you know, $10,000. They're not going to do anything. Grants are something that are you do with the foundations in Los Angeles. There is money there. It is shrinking, and it has shrunk more during COVID. But one of the things that I always think is strange is the idea that grants renew, or even a major giver renews. You just get back and get that money every year. It doesn't work that way. It's a lot of work every single time. A lot of times things change. As a matter of fact, people like Wallace Annenberg, they make you take a year off every couple of years. They don't renew. It is the same amount of work every single year to come up with a strategy, what you're going to do with them, and get a proposal into them, if they will let you. And you never send the same grant application out to everybody. Most grant applications are online, and they change. Not only do they change, but nobody has the same application. So every single time I do a grant, there is at least one, if not two, things that they ask for that I don't have to find, put together, and take several hours to put together. So grants are a process. They should not be done by anyone who is not trained to write grants. Training should be done at a professional school of fundraising training, because grants are a very specific way of writing, and if you don't have the skill to write them, you will not get the money. This was my favorite, that actually a board chair said to me about 2,000 times, and I just didn't know what to do about it, that a best practice in fundraising is to send a letter to the 100 richest people in Los Angeles, ask them all for $1,000, and then you'll have $100,000. So they're never going to see your letter, neither is their assistant, and if they got it, they wouldn't even look at it and read it. And they're definitely not going to give you $1,000 each. Even if all of those people were in your database, the return on any mailing is 2%. So this is not a valid way to raise money. And it's again, that sort of like, well, they have so much money, how come they just can't give me $1,000? They're not going to do it. They're going to feel like you're just bugging them just like everybody else. Okay, and then this is my all-time favorite, that there is a system out there, and there's a lot of people that sell these, that is going to build you a brand new website, and then they are telling you in their sales pitch that they're going to double your money in a year. We have this system, and we grow your donors, and it's a proprietary blah, 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 blah. Fundraising is, and it's the way you do fundraising, and there's new techniques, and there's new technology. All those things are critically important in fundraising. You have to keep up, and you have to change with the times. but using a piece of software that's going to blast emails out to people isn't going to do anything for you. Fundraising is about relationships. So Heather, if you don't mind
You want
going
to try
ahead to the
again,
next.
Joan? You should be able to move the mouse. Go ahead and try. There, you're doing it. Okay, all right. I'll
Okay, so let's talk about what was going on before COVID, because fundraising during COVID is what I want to talk about. So here we all know what the myths are. Prior to COVID, money was shrinking everywhere, but mostly in the corporate side. So it just continued to go down, and I really had gotten to the point where very, very little of any of the fundraising strategies I work on, unless there is a big volunteering component that people can do, it's not a valid way to, they can be at the bottom of your list. Declining returns on events. Galas have been going on forever. You see the money less and less, people come less and less, people are tired of them. There's a lot of fatigue around them. They don't raise as much money as they used to. I used to easily bring in $1.2 million. I have galas where I'm struggling to bring in $150,000. It is not an effective way to raise money unless you really have the assets it takes to put on a fantastic gala. You have a bunch of people on your board who are connected to people who will be an honoree. If you've got a huge database of people that want to come because they come every year. Otherwise, galas are a lot of work and you could have been doing something else and raising more money. Really, really, really where money is on the individual side. And we're going to talk about that. But in the foundations, one of the key trends that I have seen over the last 12 years is they've all started doing this strategic philanthropy. What that means is you can't apply. It means they choose who they want to go to and they don't accept unsolicited proposals. The other thing that I see, especially in the foundations, is a narrowing of focus. The main thing when you are going to a foundation is that your mission aligns with their mission. But what they've done is what they fund. You know, Bill Gates went out and said, I want to hear from everybody who does malaria. We got to figure this out. Now Bill Gates is saying, I make nets and I send them to people. Don't call me about your malaria thing. And so he's sort of exactly what's happening is that what they will pay for is very, very narrow so that very few people fit. They're trying to get less applications that they have to slog through and know they won't fund. So the strategic philanthropy means that they aren't going to let you apply. That's over 50% of the foundations now. When I first started writing grants, it was about 20%. So it's gone way up. And not only that, but what they will actually fund is extremely narrow and you have to fit into it. So that's the other thing I've seen. Younger wealth that is coming around, they know exactly what they want and how they're going to get it done, and they don't want to hear from you. And that is a real trend. So what we're seeing in general, less money and more nonprofits, because the millennials are opening up their own nonprofits, just about every single one of them. And a lot of them is something that's already being done. So this is really where the funders say, you know what? I can't possibly respond to everybody who applies to me. So I'm going to put even more things in place so that people can't find us and apply to us. One more time, Heather. There we go. Okay, so sorry, but I hit it too. Okay, so what happened during COVID? We hit March, and I'm going to say the beginning of March, and just about everybody I knew who had a gala coming up. Spring fundraising goes in seasons, as we all know. Spring is a big one, and the fall is another. And so what happens in the spring is people do appeals, they do galas, fundraising events, all these things are going on, everybody's ramping up, and then we're going, what are we going to do? Everybody had to cancel their events. Some of the people that canceled their events, that was the only money they had coming in this year, or almost all of it. And so that means that leaves people with no money. What I noticed was immediately after we found out we were going to be kind of shut down, every nonprofit in the world started blasting out all these email blasts. Please, people I never heard of or knew existed were asking me for money for their wonderful thing, and they all kept trying to get some sort of, excuse me for a second, way to grab your attention over all the others, but it was a lot. Many foundations, very, very early on, I got on the phone with several of the foundations to find out what they were doing. because I had applications in process or things sitting with them. And two of them said to me, we don't know what we're going to do, but we're shutting our doors. We are not going to accept any more applications. We can't take any more. We're being flooded. And one said, we don't know what we're going to do, but we're going to continue to take applications, but we're not going to look at them until next year. This was in March. So everybody who was, you know, jamming, trying to get their things in front of people, it basically had already happened. One of the things that is happening very quickly now, very rapidly, and it's just going to continue. Right now, the Blue Shield Foundation is shut down, realigning their mission around social justice, as is the Annenberg Foundation. And that is going to continue and ramp up even more. Most people were relying on the spring cycle for their annual budget, and they don't have it. So, and then what happened very, very early on was a lot of the funders in LA, and I'm sure all of you saw this and called your development director or ED and said, go get some of that money, was that, you know, UniHealth and Blue Shield and Weingart and Annenberg and all these huge foundations put millions into a fund at the California Community Foundation to fund COVID relief efforts for nonprofits. The problem was that money was predetermined. And so, and they also put it into United Way, who hasn't done a thing with it, and is going to create a phone answering panel so that people can call. That's what they're going to put the money toward. So when you see these big, it's just kind of a thing. When you see these things and you say to your ED, how come we didn't get any of that money? That money was way determined, way before anybody. I had 4 clients apply. One guy got $7,500. That was it. And they were all homeless, domestic violence, you know, emergency clinics. They just, it was predetermined where the money was going to go. And those kinds of things happen. I think I might be able to make it work. Nope, going to need Heather's help one more time here. Maybe about 8 more times. Thank you, Heather. So let's talk about fundraising in general. Now that we've talked about the myths, what does work? You have to have a mission that is unique and uniquely solves a problem, right? If you look just like Make-A-Wish, or you look just like the Red Cross, or you look just like, it's very difficult to differentiate yourself, and you are not going to do well on the fundraising side. When you are going and looking at donors and thinking, why can't we go to them? Why can't we go to them? You know, I used to have a board member who always used to yell at me because I wasn't going to Burger King. Why aren't we going to Burger King? I don't understand. Burger King doesn't even give money away, first of all. But second of all, they don't give to sick kids, which is what we were doing. So you have to have a strategic fit. If you want to beautify the parks, you know, go to Home Depot and talk to and see what Home Depot is doing about the environment. Go to somebody that's interested in the environment like you are. The key thing to all fundraising is the leadership of the organization, which is the board and the executive director. And I'm going to talk about that a little bit. If you have 500,000 and above, I, as a consultant, tell people, get an audit. You don't have to spend a fortune on it. If you have a big budget, you need a very in-depth audit and a very good one. You immediately cut out about 50% of the people you can apply for money to. People require an audit. Rose Hills Foundation requires an audit. They aren't that, you know what, so it's something that sometimes you don't want to spend the money. I have found people who do audits for $6,500. You need an audit, and you need to show that you invest that way in your organization and want to show people that you have someone else come in and look at your books. The board of directors, there are certain things that have to be in place. Individuals won't fund you, foundations won't fund you, and definitely you're going to have trouble raising money. The first thing you have to have is a policy that says every single board member has to give or get a certain amount of money. That same policy says that every single member of the board will write a check at an amount that is, you know, comfortable to them. You cannot have a board that does not give and get money. I had a board member that got $1 million, but because you have to have 100% of board giving, that is a really important thing. Our poor ED had to call her on the phone and say, I am sorry, but you have to write us a check for some kind of an amount. She was pretty mad about it, but the truth is, if you can't tell Weingart and Annenberg and Parsons and Green and all these other people in town that you have 100% board giving, they are not going to give to you, because why should they give to you if you don't give to you? Every board should have an attorney and a financial person on there. That's a key thing that you need in terms of skill set, but those two people have to agree that they will, in addition to giving their time and expertise, they have to write a check at some level. And so term limits are the other, especially if you're applying to the foundations in Los Angeles. They do not want to applying to foundations anywhere. They don't want to see that the same people have been sitting on the board for years and years and years. You've used up their lists. People need, you need fresh eyes and thoughts and things going into the organization. So term limits, get that the board is engaged in fundraising. I mean, that's the first thing they ask. What does the board do? And then 100% board giving. Those are critical to fundraising. And we're going to go to the next. Okay, the other thing is critical, and this is one of the big ones for me. You have got to have a strategic plan. If you don't have a roadmap of where you're going, then the donor cannot figure out what you're trying to do. You've got to be able to say, we have a strategic plan, our goals are this is how we're going to achieve them. You might not achieve them all, but the donor does not mind that. It shows that you put some thought and plan into your organization. You then have a fundraising plan underneath that supports the strategic plan and is based on the key assets of the organization. And then any successful fundraising has to have an excellent stewardship plan that cultivates and informs their donors and says thank you over and over again. And the board should play a key role in that stewardship plan in terms of writing thank you notes to donors and calling donors on the phone and saying thank you to them. So this is who gives. Foundations are 8% of all giving. They have a mission that they have to fulfill. You have to be in alignment with that mission to apply to them. Corporations, we talked about a lot. Individuals fall into two categories. Major gifts means people who give a lot more money. And then individuals, the mid to low is the biggest part of all giving. It's not major givers. And then events we talked about. So what are you going to do in COVID? The money that came out to support COVID, there's a little bit left. There is a little bit of PPP money left. If anybody is wondering about that, my information is in one of the slides. Go ahead and get in touch with me. I'll put you in touch with someone. There is a little bit of PPP money left. And one of my clients who has contractors, not employees, got some. So don't need to have your own mission. Have it be unique. Start with, when you look at your organization, what better time than COVID and everybody's kind of on lockdown, what better time than to look at your strategic plan and shake it up and do it again. Then look at your fundraising plan. You're going to have to redo it. Somebody on the board with the staff should be looking at your numbers all the time. How much money do we have in the bank? How many months of cash do we have on hand? If you need to do a layoff or do some sort of furloughing, do it early and do it fast. Don't let yourself be in a position where your money is just disappearing every day and you don't know where it's going to come from. Redo your fundraising plan. Redo your lead research. There are all kinds of interesting ways to find new leads. I find them every single day, and some of them work out. Pull that board in. Have a brainstorming meeting about who people know and where you can go to. Retrench and take the time to really research who is in your database. Who have you not heard from in some time? What are your plans going to be for the rest of the year, and how are you going to bring in some cash? Don't think it's going to happen fast. It's not. That's why you really have to look hard at the organization. Freshen up the language on your website so that when people go there, there's new information and pictures. Apply for everything COVID.
We are running out of time here, and I do want to make sure that we get to the information about mergers. Are you okay with jumping ahead to that section?
I am. If you can let me finish the slide.
Yeah, of course.
Okay, donor appreciation and stewardship are critical. You are not going to have a gala, not this year and maybe not next year. So figure out another way, a thing that you're going to do to raise money. Leverage digital media, having letter writing campaigns with the board. If you've never had a board fundraising campaign, do one. And I just want to say that one of the things you can really do is help. Call your development director and your executive director and say, I want to meet with you and put my personal fundraising plan in place. And I'm going to do everything I can to raise money. How can I help? chair a board giving campaign, and then help other board members focus in meetings on fundraising and what they can do, rather than focusing on what you're going to tell the development director to do, because they already know. If you cannot make, if you get to a place where you don't have a lot of money and you're worried, start thinking about a merger. And there's way too many nonprofits and not enough money, and it's one of the key ways to keep your mission intact and moving forward, even if you have to give up a few things. Go for it, Heather.
Okay, so I think you were going to talk about the strategic considerations, and then I'll talk about some legal considerations of a merger.
If you get to a place where you think you may need a merger, the California Community Foundation and Weingart, they have money to pay for you to put together a merger. Look for a cultural fit. So if you've got a group a place full of millennials, and it's looking at a place that is older and has been around forever, that's not a good cultural fit. The people think differently, they are differently. Look for complementary services rather than someone that's doing what you do. So let's say you've got a domestic violence agency, find someone who's doing some sort of therapeutic programs to merge with, rather than another domestic violence agency where you're going to have a lot of conflict on how to do things going forward. You want to look for someone that's going to enhance and grow your organization rather than something that's going to shut parts of it down. Use an attorney to do the merger. It's really important you make sure everything is legal. I highly recommend every nonprofit go through an insurance review every year. And if you don't know any of the answers to the questions that Heather talked about, get someone like Heather on board to do a legal review as well. But you need a lawyer and you need someone external who has done a nonprofit merger to do the merger. And every aspect of your organization going forward needs to be thought through. You're not going to get there and figure it out. It's going to be a mess. And there are costs. Well, I always say avoid the big smush. I've been through one. They took two things and went like that. And guess what they got? That. So avoid the big smush. Make sure it's thoughtful and that you've thought through every piece. Know who you're going to lay off before you go into it.
Okay, so some legal considerations for mergers. Number one, you need to notify the California Attorney General at least 20 days prior to the completion of the merger. This is for when a public benefit merges with another public benefit or a religious corporation or a foreign nonprofit charitable corporation. When a nonprofit merges into a business or a mutual benefit corporation, the assets first must be distributed to another charity with the same or similar purposes. Another consideration is which entity will be the merging corporation and which will be the surviving corporation. So you need to consider the history of each entity and its recognition of tax exempt status, existing licenses, contracts, registrations, and each entity's employees and their benefits. What are the liabilities? So due diligence is going to be key here. The surviving corporation automatically assumes all the assets and liabilities of the merging corporation upon the merger by operation of law. So the debts of the merging corporation become the debts of the surviving corporation, which is automatically substituted for the merging corporation in a lawsuit or a legal proceeding. And this could be problematic if the merging corporation's liabilities can't be identified or if the merging corporation's liabilities are greater than expected. Do you need to get member approval? Is that something that might be a barrier to getting the merger completed? Are there restricted funds? So if the merging corporation has restricted funds that are bound by charitable trust to a purpose that doesn't completely line up with the surviving corporation's mission, that could be a problem. So in that case, the surviving corporation may have to amend its governing documents to broaden its purposes in order to receive those assets. But remember what I said earlier about changing your purpose, and you have to only use money that was raised when for the purpose at the time that the money was raised. And it may be that the merging corporation may have to grant those restricted funds to another organization prior to the merger. What about contract rights? The merging corporation should also review contracts, determine which may be freely assigned and which could require a consent from or notice to the other party to the contract. And finally, consider a dissolution. So a dissolution is when you transfer assets to another entity and then dissolve. So when the dissolving corporation distributes its remaining assets to the recipient corporation and then dissolves, The recipient corporation generally does not automatically assume the dissolving corporation's liabilities. So unlike a merger, the liabilities do not necessarily transfer to the recipient corporation by operation of law. But be careful, because if the dissolution is not properly structured, a court could conclude that the corporate restructuring was in substance a merger, and that the recipient corporation should be treated as the surviving corporation in a merger. So again, just making sure that all those loose ends are tied up so it's not presumed by a court to be a merger. So that's all I have on mergers. We're going to open it up to some questions now.
Joan and Heather for that. We really appreciate it. And right now I'd like to go ahead and welcome Holly Schroeder, who again is chair for our nonprofit council. I know we're running short on time, but we've got a couple questions that Holly will be asking, and then we'll wrap it up. So Holly, I'll turn it over to you now.
That was absolutely fantastic. Thank you all. So yeah, we just had a couple of quick questions. One was about the relationship between vendors or services that you use and board membership. So if somebody's a member of the board and they provide a service that you purchase, are there conflicts of interest that have to be managed? And if somebody is doing that, how does that relate to sort of the donation and the give-get that Joan talked? Though you both talked a little bit about that.
Yeah, I'll take the lead on this one. So you do have to watch out for conflicts of interest and deal with them appropriately. And if you do have a board member who is providing services to the organization, number one, it has to be fair and reasonable. Number two, there must be a majority of independent board members approving that transaction. So the board member who is providing the service is not related to any of the other board members by blood, marriage, or in business. And you still have a majority of board members to approve that transaction. And let's say, for example, that there are many vendors in the industry who provide that one service. The board should get quotes from other vendors who provide that same service so that they can compare and see what is a reasonable price, what services are they offering, why is this board member more qualified than somebody else to provide the service, and really make their decision as if the person was not on the board at all. Because they do stand to benefit from receiving that compensation for that service that they're offering to the nonprofit. So those conflicts of interest need to be properly addressed.
Joan, you want to weigh in on what if somebody provides services gratis? How does that relate to give, get, and demonstrating board participation in fundraising?
I have run into this, and it is still that board member, so that's lovely, right? And especially if you don't have to pay for it. I mean, you can't do an audit, I think. You need an external person to do that. So it depends on what it is, first of all. That board member still needs to write a check. It could be a check for $10, but they still need to make a cash donation to their organization. I have run into that. We're a food bank. One board member brought food every month, and he thought that was it. And he kept saying, well, how come it doesn't count? Of course it counts, and everyone's grateful to you. But we need to have 100% of board giving, and it needs to be a cash donation. And I will weigh in on the other part. I would say, having run many organizations and been in organizations, if you've got somebody's wife being your vendor for this or that, or they are, it's always a mess.
It's definitely an area
of problem. Look at your head. It's always a mess. Don't do it. Have a policy that says we don't do that.
One last question on financial statements, and Heather, you went through that. How often should be shown to the full board? And if you go into that second part of your presentation about mergers, how and when would you share that information?
Whenever a financial statement is prepared, it should be presented to the board for review. And in terms of a merger, it's the very first thing that should be shown to the acquiring corporation. That's the mainstay of due diligence, is what are the finances like? Is this entity in the black or the red?
Great. I could probably ask you guys questions all day. For those of you, I want to thank everybody for sitting in. And what we plan to do with the Nonprofit Council is bring in expert speakers such as we've done today. I want to thank Joan and Heather, and certainly thank LBW for their sponsorship. And then we're going to have other mastermind sessions where we'll have nonprofit leaders who talk about the ways that they grapple with these issues. And so we're going to have a combination of those types of events. Thanks to the leadership and support of the Chamber. So I want to thank you all for being here today. Thanks for being a part of the Nonprofit Council. And Peter, I'll turn it back to you.
Perfect. Thanks, Holly. And I want to first thank LBW, Mitzi, and your whole team for sponsoring this event, doing this. Thank you, Heather and Joan, again. And Holly, thank you. We're glad that you were able to join us and to help facilitate all this. As Holly mentioned, we're working really hard with her and getting the Nonprofit Council going with events. So we'll definitely be in touch with all that. I know we ran out a little bit of time, so if we didn't get to your questions, or if you have any other questions, please email hello@scbchamber.com. We'll do our best to get your questions over to either Joan or Heather, and I'm sure they'd be happy to assist in that way. I know a couple questions that come in. We will be sharing the PowerPoint as well as this has been recorded, so it will be up on our YouTube channel for everyone to watch. But until then, don't forget to check out our events page. All our events are coming up. We'll be there for you to register. With that, please be safe and healthy. We look forward to seeing you all soon. So thank you, everyone.
Thank you so much.
Thank everybody.